Hey everyone, and welcome. If you've ever felt like the Indian stock market is this big, complicated puzzle, you are in exactly the right place. Today, we're going to break it all down and demystify it piece by piece. Let's dive right in. You hear it all the time, right? The Sensex is up, the Nifty is down. All these terms are thrown around, and it can feel pretty overwhelming. But don't you worry, by the end of this, all that confusion is going to turn into clarity, and all this jargon will actually make sense, I promise. All right, so to really wrap our heads around this, let's think of the stock market like a massive sports league. And here in India, there are two main arenas, two major stock exchanges that basically run the whole show. So on one side, you've got the BSE, the Bombay Stock Exchange. This is the old guard, the veteran. I mean, it's the oldest stock exchange not just in India, but in all of Asia. It's been around for over a century. And then on the other side, you've got the NSE, the National Stock Exchange. This is the modern game changer. It was founded way later in 1992, and it completely turned trading on its head by being the first to introduce a fully electronic system. Okay, so let's put them head-to-head. You can see the BSE lists a staggering number of companies, over 5,000. That gives you a huge variety to choose from, especially smaller up-and-coming businesses. The NSE, on the other hand, lists fewer companies, but, and this is a big but, it has way higher trading volume. So what does that actually mean for you? Well, it means more shares are being bought and sold on the NSE every single day. This creates something called liquidity. Just think of liquidity as how fast you can sell your shares for cash without messing up the price. So if you're an active trader, that high liquidity on the NSE is a huge advantage.
Okay, so if the BSE and NSE are the two competing arenas, how do we keep score? How do we know how the market as a whole is doing on any given day? Well, for that, we need to look at the big scoreboards.
And these scoreboards are called market indexes. So what is an index? It's pretty simple, actually. It's just a benchmark. It takes a handful of the top most important stocks from an exchange and kind of bundles their performance into one single number. That number gives you a super quick snapshot of the market's health. Is it a good day or a bad day? Just look at the index. And this is where it all connects. The main scoreboard for the BSE is the famous Sensex. So when you hear the Sensex is up, it just means the top 30 companies on the BSE are generally doing well. And for the NSE, its scoreboard is the Nifty 50. As you probably guessed from the name, it tracks the top 50 companies on that exchange. Now, the real difference here is what these two scoreboards are tracking. The Sensex, which is short for Sensitive Index, it tracks 30 companies across 13 different sectors. But the Nifty 50, short for National 50, it tracks 50 companies across a much wider range of 24 sectors. And you know what? That really matters, because if you want a true pulse check on the health of the entire Indian economy, from banking and IT to pharma and auto, the Nifty 50's broader scope gives you a much richer, more complete picture.
So how in the world do they get to that single index number? It's not just a simple average, it's a bit smarter than that. They use something called the free float method. So first, they figure out the total market value of each company. Then, and this is the key part, they adjust that number for the free float. The free float is just the shares that are actually available for you and me to trade, not the big chunks locked up by founders or the government. Finally, they crunch the numbers to get the index value based on that free float against a set point in the past. It's really just a clever way to measure the real market movement that affects everyday investors.
So, we've covered the arenas and the scoreboards. Now let's talk about you. How do you actually get on the field and start playing? What's in your personal toolkit for investing? You're going to need two essential pieces of gear. First up is a trading account. Think of this as your cricket bat. It's the tool you use to take action, to actually buy and sell shares. Then you need a demat account. This is like your kit bag. It doesn't do any of the hitting, it just holds all your gear, in this case your shares and other investments, safely and securely in an electronic format. You know, the word demat is just short for dematerialized. See, back in the day, you'd get these physical paper certificates for every share you owned. It was clunky and slow. The demat account was a total game changer because it turned all that paper into a secure digital format, which made trading incredibly fast, easy, and way safer. So where are all these electronic shares actually stored? Well, your broker, who is technically called a depository participant, manages your demat account for you. But the shares themselves are held in one of two giant central depositories. Think of them like huge digital vaults. You've got the NSDL, which mostly works with the NSA, and the CDSL, which mostly works with the BSE. These guys are the ultimate guardians of your investments. All right, you can't have a game without rules, right? You need a referee, you need a clock. It would be chaos otherwise. And the stock market is absolutely no different. It has a very strict structure to make sure everything is fair and orderly. So, let's meet the head referee of the entire Indian market, SEBI. That stands for the Securities and Exchange Board of India. Basically, think of SEBI as the powerful regulator that watches over everything to make sure there's a level playing field for everyone.
So, what is SEBI's job exactly? Well, its most important job is protecting investors, people like you and me. They work to prevent fraud and shady practices like insider trading. They regulate the exchanges, the brokers, the mutual funds, the whole shebang. SEBI's entire mission is to keep the market's integrity intact and help it grow in a healthy way.
And what about that game clock? Well, trading isn't a 24/7 free-for-all. The day kicks off at 9 a.m. with a quick 15-minute pre-opening session to help things settle. Then, the main event, the normal trading session, runs from 9:15 a.m. straight through to 3:30 p.m. After that, there's a post-closing session until 4 p.m. to finalize everything.
And here's another super important rule you need to know. T+1 settlement. The T here stands for trade day. What this means is, when you buy shares, they'll actually show up in your DMAT account just one business day after you made the trade. India is one of the few big markets in the world that operates this fast, which is incredibly efficient.
Okay. Phew! We've covered the arenas, the scoreboards, the gear, and the rules. So now we get to the really big question. As a beginner, where should you even start?
Let me give you a really simple way to think about this. If you're someone who loves the idea of discovering a huge range of companies, maybe even some smaller hidden gems that aren't on the main index, the BSE could be a fantastic place to explore. But if your plan is to trade more frequently, maybe even day trading, then the NSE is almost always the better choice, simply because its higher liquidity makes getting in and out of trades so much easier and faster.
But honestly, for most people just starting out, don't get too hung up on this choice. The truth is, for most long-term investors, the exchanges are way more similar than they are different. All the big, famous companies are listed on both anyway. At the end of the day, it really just comes down to your personal goals and what feels right for you.
And there you have it, the basics of the Indian stock market, completely decoded. From the big arenas like the BSE and NSE, to the essential tools like a DMAT account, and the rules of the game like T+1 settlement, the playing field should feel a lot less confusing now. So the real question is, what's your next move? Let me know your thoughts, or if you have any questions at all, drop them in the comments below. Thanks so much for watching.